What's up, everybody? Steve here. Today I'm going to talk about some mass layoffs going on in the banking and lending institutions. I'm going to talk about three specific companies right now: Wells Fargo, Bettercom, as well as Rocket Mortgage. And then I'm going to lead you guys to this other website I found, and I will link it below for you guys as well to check out. But this guy's list that he puts together of mortgage companies that are doing mortgage layoffs and acquisitions, and frankly some going completely out of business, is pretty impressive. So let's start off with Wells Fargo. They are in the process of laying off employees in the mortgage related sector of their business. Goes on to say Wells Fargo has begun laying off an undisclosed number of its home lending employees little more than a week after reporting mortgage or origination volumes have dropped 33% year over year. Also, if you guys work in any of these businesses or any of these companies as a mortgage broker, loan origination, or underwriter, or anything to do with mortgages, and you guys are getting any of this information, or maybe you guys are getting laid off, I'd appreciate if you guys put the really what's going on below and just give us some insight as well, because it all helps us to analyze more what's going on. The home lending displacements this week are the result of cyclical changes in the broader home lending environment. Obviously, we're seeing basically refinances completely fall off. With the exception to the few people that, probably need money. They're utilizing their home as an ATM machine and they're pulling cash out, which is not necessarily a good idea, especially if you're refinancing into a larger rate and you're coming out of a lower rate. Probably a bad idea right now to do a cash out refi, so I'd advise against it. I'm not a financial advisor, so you do not take this as financial advice. Processing, underwriting, and credit administration teams were all notified their positions would be eliminated because of the changing mortgage market. They were given a 2-week notice. CFO Mike Santamassimo said, "We've started to reduce expenses in response to the decline in volume and expect expenses will continue to decline throughout the year as excess capacity is removed and aligned to lower business activity." He said he blames a decrease in refinance activity along with higher interest rates for what he called the steepest quarterly decline in the mortgage arena since 2003. Now, obviously, Wells Fargo is not the only one doing mass layoffs, and I am very curious, if you do work for Wells Fargo, I'm curious as to how many people they're anticipating. But let's jump over to Better.com. If you guys, I did some other videos on this. The CEO completely botched the layoff, the first layoff. It was a Zoom meeting. It went viral. Check out that video if you guys have time. But basically, he's a dirtbag. And so he no longer is responsible for laying off people. Goes on to say the first 2 rounds of layoffs cut over 4,000 jobs, almost half of Better's workforce. A spokesman didn't respond to a question about how many employees were affected this time, but people familiar with the numbers say at present it's at least 1,000 employees. Insiders say Garg received lots of hate mail. This is the guy, he's the CEO, Vishal Garg. He received lots of hate mail after the December and March mass layoffs, and instead it was signed by Richard Benson Armour, Better Chief's People, Performance, and Culture Officer, who initially joined to manage the PR crisis caused by the December 1st layoffs. Obviously, he needed somebody to fill in and do damage control. And then this is the memo that he tells employees. As you know, our team has been focused on ensuring that our business is nimble, able to weather industry headwinds and place in the strong position possible for future by implementing operational changes, reducing costs, and making the difficult but necessary decisions to reduce our workforce. As the mortgage environment in which we operate continues to indicate further declines ahead, we have to do more to ensure Better is appropriately positioned financially and operationally to navigate this changing environment. It is through this that we will continue to work to further position Better on its pathway to profitability. With this in mind, we have made the difficult decision to make another substantial cut to our production workforce in the United States. In December, Garg said Better lost $100 million the previous quarter. It says affected employees will receive the same severance package offered back in March, which is 60 to 80 working days of pay plus 3 months of COBRA health insurance. Man, I am so sorry to hear about everybody that's getting laid off, not just in Better.com, but all of these companies. It does suck, and I can tell you, it's one of those things too where I think that, and on this channel I do a lot too in terms of really pushing people to understand the importance of multiple streams of income. So if you guys can figure out other ways to make money, even money online, while you're working in a certain industry with a certain company, I highly encourage you to do so, especially if we start going into a recessionary period. There might be other companies that are going to fall to the side and go out of business as well. And then Rocket Mortgage states to trim workforce as home loan market shrink. Detroit-based Rocket Mortgage and Amrock, its title company, are offering voluntary buyouts to 8% of employees. Rocket companies, which include Rocket Mortgage, employ 26,000 employees. And it goes to show you that, it's not the mortgage market either. This is, it's title companies, it's real estate agents, it's anybody that is associated with real estate is going to start to feel this if mortgage interest rates stay where they're at and or even go even higher, which I anticipate that they probably will. It could be a painful experience for a lot of people who are involved in the real estate field. Now, check this out. I came across this article. This guy's name is Colin Robertson. His website's called thetruthAboutMortgage.com, and it appears that he's done a bunch of research on mortgage companies, lenders, banking institutions, and talking about mergers, closures, layoffs in the industry. And it appears that he did his research even back then in the last housing crash. And he goes on to say, recently the mortgage layoffs have been driven by a major decrease in refinance demand and a dwindling pool of eligible home buyers thanks to significantly higher mortgage rates. But check this out. As I scroll down here, the list last updated April 26, 2022, which literally was yesterday. I'm not sure when this video is going to come out, but this is as of April 26th. So this is the latest update, and he's got a whole other list I'll show you on the full report. But Rocket Mortgage, 8%. Wells Fargo, unspecified. We just talked about that. Blend Labs, 200 employees. USAA Bank, 90 plus mortgage jobs. He also utilizes the comments on this article from employees of different banking institutions, and he put those in here as well. Penny Mac, 155. Better Mortgage, we just talked about that, 3,000. TD Bank to acquire First Horizon Corp. You guys can go through this. Stern Wholesale, 348 layoffs, and they're shutting down, it appears. Zillow Offer shut down 75% of its staff to be let go. You guys can go through this list. It's a big list. Open Door cut 600. Redfin cutting workforce 7%. eXp Realty reduces headcount by approximately 15%. I don't know what that means, if that's real estate agents. I don't think it is, because they've been growing pretty tremendously with bringing on real estate agents. Athens Capital seizes lending, cuts 172 jobs. Angel Oak, 200 jobs. Freedom Mortgage Company, 171 jobs. Mr. Cooper to close. Beaver, Oregon office cuts 301 jobs. Now, this also might sound like a low amount of jobs being cut, but you guys have to understand, interest rates just went up over 5% recently in literally the last, 30, 45 days. So this could be the telling sign of just the beginning. So these companies that are laying off 200 people doesn't mean that next month they're not going to lay off 2,000 or 20,000. So again, if you're in one of these companies, you guys probably want to ask some questions and making sure that you guys are financially protected. WMC Mortgage files Chapter 11 bankruptcy. I mean, I definitely want to dissect a lot of these companies and see what's going on. So if we keep scrolling down here, here's the complete list. And it appears it's actually in alphabetical order. And that list above was basically just the update. So this is, again, astonishing. I'm still in the B's right now. Like, wow. Anyway, I think that there's a lot going on in the real estate industry. There's a lot going on in the, obviously, in the stock market as well. And I think it's important that everybody is protecting themselves. And, is this going to have an effect on housing? I believe so. A lot of these banking institutions are seeing that the demand has decreased, so they have to protect their businesses and they have to cut costs, and that's cutting employees' salaries. And so they're all predicting that there's a slowdown in real estate because of higher rates. And whether a lot of these companies are insolvent or not, time will tell. But there's going to be a slowdown in real estate, in my opinion. And if you're in any of these companies, comment below if you guys could. We appreciate it. And be safe out there. And appreciate every subscriber on this channel. I'll see you guys on the next one.